During periods of geopolitical conflict and economic stress, many traditionally safe strategies fail. This webinar will explore the strategies investors have historically used to protect capital and maintain stability during times of global uncertainty.
All right, folks. Well, first, I want to say thank you for joining us. This is an education webinar, War on Your Finances. During periods of geopolitical conflict, economic stress, many of your traditionally safe strategies fail. There's a reason why. We're going to talk about that today. We're also going to talk about things you can do to protect yourself during these times. Drew and I, if you caught any of us talking beforehand, we call it the pregame. If you caught us talking in the pregame, one of the things we're talking about is history repeating itself. We're seeing things right now that we saw in 2008. So any of you that were investors in 2008, this is literally history repeating itself. My personal opinion is I think it's much worse. I think the credit exposure then maybe the numbers were higher, but I think the type of credit this time around is much worse. There's very little collateralization and stuff, but we'll get into that in just a few. Let me tell you guys a little bit about the company. Gold IQ Group was formed to be, for lack of a better term, the smartest minds in metals. The idea was to grab the best and the brightest from different areas of metals investments, from different areas of market knowledge, and to help educate, personalize, and support the average person who is looking to invest in metals. So this isn't for companies. This is for you. This is for the individual person. On a quick overage, we are very secure and compliant. We only work with IRS-approved depositories and custodians. Compliance focused. What do we mean by that with the different mints? We only work with LBMA, COMEX, or sovereign mint metals. And we do have two things that really set us apart. Aside from the education side, we are industry-leading buyback. Our industry-leading buyback policy. A lot of people that will sell you guys metals, they just want to get whatever they have off their desk. We look at it as an overall strategy, which is one of the reasons why we do these types of webinars. Okay. And then the IRA account setup is also completed the same day. We'll talk a little bit more about that later and why that's super important. Quick disclaimer, this is for education purposes, okay? We are not giving financial advice. We're giving our opinions on some things that we see that are going on in the marketplace and what we think the best strategies are to protect yourself. But I think a key word right now is give yourself the best opportunity to be successful. So it isn't just about protecting yourself. It's also about giving yourself an opportunity to find success, because anytime there's conflict, anytime there's struggle, there's also opportunities. So full disclaimer, it's available at the footer on the website, but guys, this is for education purposes. All right. Quick introduction. I'm Mikey Z, Mike Zanetti, 25 years in the finance industry, former investment banker. I was with one of the largest institutions in the world for 15 years. I'm the founder, owner, and operator of multiple trading education, and trading software companies. And I like to say I'm not only the president, but I'm also a client. Okay. Now, I use that phrase kind of jokingly, but one of the reasons I use that, particularly when it comes to metals and these strategies, is because I like to listen. The second person we have with us on today's call is Drew, the gold guru Urasek. So Drew is 20 years in the industry. Investment grade metals analysis for 10 plus years. He's helped thousands of people safeguard retirement accounts. He is the chief metals strategist at Gold IQ Group. He is the managing partner of The Complete Investor, a decorated U.S. Marine with 8 years of service. But I want to say one thing, guys, that's super important with Drew. I love getting on these webinars with Drew because I personally learn something every time. I urge you, please get a pen, get a pad, get ready, because the information you're going to get today, I'm going to tell you, you're not going to find anywhere else. Okay. It's a comprehensive amount of it's comprehensive information about a topic that you get bits and pieces of at places. So please pay attention. You're going to love this, guys. Drew, take it away.
Thank you so much, Michael. I love the events you put on as a company. Gold IQ Group curates probably the best information in the marketplace for investors to really learn the best strategies and the best resources to protect your money, grow your money safely, and really have more options than you would if you were trying to do it on your own. Now, a little bit about me. I'm going to jump out the webinar here and tell you a little bit about my company, The Complete Investor. I've been in gold myself personally since 2010. I actually learned from the top traders at the Chicago Board of Trade, the #1 commodities and futures exchange in the world. I launched my company. I've been helping people protect their retirement accounts with physical precious metals, real gold, real silver, since 2016. I've helped thousands and thousands of people protect tens and tens of millions of dollars. You can look up me online, and I encourage you to do so. Drew Urisak Gold in any search engine. I only have 5-star reviews because number one, I teach. I inform you so that you go into a transaction knowing what you want to do. 2, I support you. I support your decision, whatever it is. And then 3, I make myself available. Now, a lot of people don't know this. You can actually own gold in your retirement account. It's a tax-free, penalty-free move. You can take any money that you have in a qualifying 401k or IRA and tax-free, penalty-free move into gold. You lose no value. You're just moving from paper to physical assets. Now, tonight, I'm going to talk about why you might want to consider that, okay? Also, we deliver gold direct. If you have cash that you want to convert into gold, nobody delivers gold faster, safer, more effectively than our company. Gold in your hands in 1 to 2 days. Silver in your hands in 1 to 2 days. I've heard just in the last few months people telling me that they've been getting quotes for 8 weeks and longer just to get their precious metals. And as Michael mentioned, we also cash you out. We pay fair market value, no discounts, no penalties, no fees, and usually in the same day. Now, I've also heard horror stories of people trying to get out, especially when silver was at like 120 and they're like, oh, I made a ton of money, let me get out. And people saying, oh, it's going to take 4 weeks, 5 weeks. No, we can deliver not only gold in your hands in 1 to 2 days, our cash out is also just as fast. Now, we also have live events. We come to areas all across the country. We're actually going to bring up this event later in the webinar here. We are meeting in your area all over the country. This event here is our biggest one, Wealth IQ Group with Gold IQ Group, coming together with some of the best investors, the brightest minds, teaching you not only how to grow your money, protect your money, and give you options that you never thought were possible. And again, these are all on my site, thecompleteinvestor.net. But without further ado, let's get into tonight's content. And let me tell you, there's a lot to cover. So we might miss some stuff because we want to respect your time. We're not going to make this terribly long, but there's a lot of things going on. We'll obviously go over the Iran conflict that's going on right now, the effect it has on the markets, what smart money is doing right now, what the big money is doing, because there's some clear signs money is moving. But the overall theme tonight, I want you to know, there are only a few times in your life, usually about once every 20 years. So as an adult, only a couple times this is going to happen, where you have an opportunity to move your money when everybody else is. And when I say everybody else, the big money. And these shifts are happening right now. And what we were talking about in the pregame, Michael was talking about, it's looking very scarily the same as 2008, okay? Remember the mortgage-backed securities, a little teaser here, mortgage-backed security? Imagine that scandal, but worse. And we'll go over that here in a second.
Much worse, much worse.
So obviously we had the Iran build-up. We already knew. We already went in and bombed, some of their targets that we say were, buildup of nuclear weapons that might have threatened the U.S., right? So we attacked those last year, about 8 months ago. But all this rhetoric going back and forth was that they're rebuilding. So we started committing more assets. I don't know if you saw, we put 2 huge carrier groups. Now, I was in the Marine Corps. So when they put carrier groups in, this is costing the country hundreds of millions of dollars a day. So they're not going to put that much resources without using it. So we already saw this buildup happening. So we knew it was going to happen. I hate to say this. The people in our community, the people in our groups, our investors, our clients, we were already talking about this. This was going to happen. Now it launched. Now it's costing us money, okay? We obviously had an energy shock. You saw, oil just jumped to $100 a barrel. The market volatility swung. The big thing that you need to look at, if you don't look at it, look at the VIX. The VIX is the volatility index. Jumped up to 30. It went over 30 for a couple days there, right? And then investors are starting to say, what happened? Where did my money go? All of a sudden, my great returns are starting to get really volatile. And there are some things happening under the radar where assets are moving, and you need to know where they're moving, okay? But on top of all this, okay, is a pattern. There's a pattern being created that you need to follow. First, you have a conflict, right? Then you have the market volatility, then money moves. Okay, so this is a pattern that you need to be aware of. You have the conflict, you have the market volatility, and then the money moves. So where's it going? Okay, now this volatility is not over yet. This hasn't shaken out yet. There are more things at play that we're going to go into tonight than just this war. And as a matter of fact, I think it's worse than the war. Now I'm going to bring Michael out here in a couple of seconds because he's the Wall Street guy, so he can give you some more details. But obviously, this is something that everybody should know. So we were talking about 7,000 S&P before Christmas. We were going to hit the 7,000, and we didn't. At the same time, we had this ramp up and all this rhetoric of war in Iran. All right, we committed 2 full battle groups, carrier groups they're called, right? Where you have a carrier, all the ships that go along with it, all the Marines that go along with it, right? All the equipment, facilities, weapons, you name it, for 2 full carrier groups, right? Hundreds of millions of dollars a day just to have these things sit in an area, okay? So we have that happening, and we can't get over 7,000. Keep that in mind. We keep on bumping up against it, pulling back, bumping up against it, pulling back. And then the war happens, and then we had this big drop. At the same time, remember when oil was $50, $55? I have energy stocks in my portfolio. I actually do like energy stocks, good companies that pay high dividends, right? So I actually like them, especially going into market uncertainty. But I was always saying, man, I don't know, should I pull out? Because $55 a barrel, these companies do not make any money, all right? Conflict happens. I say, you know what? We're committing this kind of resources in the theater. Guess what? I'm staying in my oil stocks, and thankfully so. Okay. And by the way, I called this out, right? Go ahead, Michael. You want to say something?
Yeah, and that was the second. I was going to go right to that. It's not just about oil going up and it hits us right at the pumps. You have to recognize that oil going up has a massive impact on the rest of the economy because it affects transportation costs of all your goods. It literally ripples through the economy. It's not just about, oh, it hit me at the pump. And I think that's just an important point to understand, that all these things are correlated.
Right. And by the way, we already had a blockage of the Strait of Hormuz prior with all remember the tankers got big ships got locked up because of some kind of accident, right? So we already know how bad that can impact the whole economy, the global economy, not only oil, but also goods and services, materials, especially for farming, because a lot of the materials for farming, all the chemicals that farmers use, come out of the Middle East. Now, that being said, this is the biggest problem with the war. It's costing $2 billion a day. $2 billion a day. I went over this in a couple of my webinars over the last 2 months. People don't realize the cost of war. Just the Patriot missile system, by the way, that we're paying for. I don't know if you know this. We pay for Israel's Patriot missile system. We pay for Ukraine's Patriot missile system. Just to replenish what we've used in Ukraine and Israel to date is going to cost, some are saying, $1 trillion. Okay, so keep this in mind. The cost that's going on. Now, this is why you need to look at gold, in my opinion. And why, if you're going to say, Drew, I want a guaranteed return on my investment, Drew, I want 100% insured assets, look at gold. Now, there is no such thing as guaranteed returns on investment, but you can kind of guarantee what's going to happen with our government when we start spending money like this. Our debt. We're currently at $43 trillion in debt. $43 trillion in debt. There are analysts right now, the highest profile analysts, Ed Yardeni of Yardeni Research, Jamie Dimon of JP Morgan Chase, are saying we're going to be at $100 trillion in debt by 2030. Well, let's go to the guaranteed returns. Well, wait a minute. Gold goes up with our debt. Gold is currently about $5,000 an ounce, okay? Gold goes up with our debt. It's been proven. We spend money that we can't afford, gold goes up. Why? Because it's a safe haven asset. Because if we default on our debt, the whole global system falls down. Okay? And it's been proven over time, if we keep on spending money that we don't have, gold will go up. Well, wait a minute. If our debt more than doubles and gold goes up with our debt, gold should double. And that's why you're starting to see people forecast $10,000 an ounce in the next 4 years. And by the way, those are conservative numbers. And last but not least, and I'll go
before the war, Drew. They were saying that before the war.
Oh yeah, this is before the war. This is all before the war, because all this is happening before those numbers and projections came out. There are some analysts saying $20,000 an ounce in the next few years, but I'm conservative. I'm conservative. So how would you like an investment that is not only guaranteed, again, can't guarantee anything, but is tied to something we know is going to happen, our debt going up, right? And physical precious metals in your retirement are 100% insured with all risk coverage and are not taxed the same. I'm actually going to go into the details. Physical precious metals aren't taxed the same as paper assets, not taxed the same as stocks, not taxed the same as bonds, mutual funds, CDs, annuities, or even cryptocurrency. And I'm sure in retirement, you'd rather be taxed less than more. Oh, and one little secret I'll go over a little later, you can actually also own physical precious metals that are deemed non-reportable by the IRS. Whoa, what does that mean? Again, I'll go over a little more detail later. But there's actually guidelines in the IRS 1099-B guidelines for precious metals that deem specific coins non-reportable, which means while you own them, you don't have to report to anybody that you have them. Me as a dealer, I don't have to tell anybody that you bought them from me. Again, these are things that don't exist with any other investment. Now, here's the scary thing, and I'm going to bring in Michael here in a second, okay? The Wall Street guru. This is just as scary as anything, if not more scary than anything I've covered. And it is the private credit market. See, in 2008, why is this worse than 2008? And again, I'll have Michael expand upon this, okay? Why is this worse than 2008? See, in 2008, the markets crashed and nobody would lend money. And it made sense because we were broke. We were promising all these mortgage-backed securities to investors saying that they're good investments, and they all crashed, right? $800 billion, by the way, to do the initial buyout. $800 billion, like that. Barack Obama signed the note, boom, $800 billion in one day, just the initial bailout of that fiasco, okay? So nobody was lending money. So a few companies got together and said, we'll lend money, but only to the wealthiest people and the best companies. We'll do private lending. This got so big and so popular that more and more people wanted to invest in it. Private investment, private equity. So the average investor could not get in. And it was a good old boys club. We're only lending to the best of the best. The biggest companies, the wealthiest people. Okay? It got so big that the banks wanted in. JP Morgan Chase, Wells Fargo, Bank of America, Goldman Sachs. We want in. We'll give you guys money. Keep on lending to these people, right? Because you don't have to follow the same guidelines we do because of the 2008 crash. Okay? Started getting so big and so popular that more and more companies, private equity firms, got involved. Let's create our own private equity firm. in our private credit investments, right? Let's just keep on building it. Let's expand it to more people. Let's offer more credit to more people. Here's the problem. About 8 years ago, Congress was lobbied to let the average investor invest in these private equity firms. The average person, probably about, I think it's 70% of people that have an IRA with a mutual fund, a 401k, right, or a pension, 70+% of you have these investments. Here's the problem. They grew so big and so fast that they started lending money just to anybody. The default rates now are up to 15%. And it's so bad that they're speculating that this buyout could cost us $2 trillion. You heard me, $800 billion for 2008, $2 trillion. It's so bad that these firms are not letting people take out their money because there's a run on these investment firms to take out their money. And again, let me, without further ado, let the Wall Street guru talk about how bad this is.
And thank you, Drew. And so one thing I want to presage this with is these sound like the sky is falling type language. And I want you to understand that I don't perceive it that way. I don't think Drew does either. I perceive these as opportunities, not as if you strategically take advantage of the opportunity, it can benefit you. These are not necessarily dangerous if you do the right things. Okay. So actually, can you go back to the earlier screen? I want to talk about that one first. So one important thing is that the credit markets are already cracking. Everybody that's on this call with us right now has watched inflation for the last however many years. You've seen it at the grocery store. You would buy that $10 of steak, the exact same package, and then now it's $15, right? It's $18. Boxes of cereal are $7.
30% real inflation in 3 years.
The numbers are crazy, right? So the credit markets, and what happens in those types of situations is the credit that's being used goes up. The interest rates are up on that credit. And at a certain point, it has to pop. It has to pop because the earned income doesn't keep up with it. Okay? The income increases don't keep up with the inflation that's happening. And we've all lived through this and watched this. Okay? So we were already under a tremendous amount of financial stress. Okay? When you add to that the real estate markets have also reached a peak where the real estate, the cost of real estate in most of the cities in the United States, in many areas, even rural and suburban areas, has gotten astronomically expensive. Okay. The overall cost of living has gone up, which means people are now borrowing just to live. Okay. And it's not everybody, it's a portion of the population. So you have to set the context and understand that's what you're starting with. Now, the way that they're borrowing, okay, and guys, guess what? Everybody on this call is a consumer debt person, okay? If you have a credit card, if you have a car loan, if you have, I'll give you one that most people don't even think about, your cell phone. Most people don't go into their Verizon and pay $1,500 for a cell phone. They say, no, it's $12 a month or $30 a month. Just so you know, that's consumer debt, okay? So what happens is that consumer debt in and of itself is extremely high risk compared to mortgages. Earlier on this call, we said this is like 2008, only worse. The difference in 2008, in my personal opinion, is that the primary issue was mortgage-backed securities. Okay? That was the initiating issue that sort of made the house of cards fall. But here's the thing with mortgage-backed securities. They were mortgages on properties. There was an underlying asset in most situations that at least softened the fall. With consumer debt, there's no asset. So in a consumer debt program, whether it's a fund, whether it's a packaged group a group of obligations together, however they're put, when they collapse, there's nothing left. They go to zero. Okay. So the case in point, BlackRock, and the reason why BlackRock, people have been talking about that is you're talking about one of the largest private equity funds in the world just recently had one of their debt funds collapse. Okay. So this isn't some small bank in rural North Dakota that collapsed. This is a fund at one of the largest funds in the world. Okay. That's why it's getting everyone's attention. All right. And the term that I'm hearing a lot, and I saw it recently in the Wall Street Journal, is they're calling it the canary in the coal mine. Okay. And when you start digging into it, you realize, wow, there's a lot of other ones that are collapsing that we haven't even seen because they're not as important as BlackRock. Blue Owl was one. There was just a bank. What was the bank up by you in Chicago? Metropolitan Capital and Trust. That just happened in January. So these are things that happened before the war footing. Okay. Before this happened, this collapse was already in play. All right. So the big concern here is let's just take that into account. This was already a structure that was teetering, and then you hit it with another punch. Okay. Can you jump to the next slide, Drew? So people say, well, I'm not invested in any private equity. I'm not exposed to that. Well, guess what? What Drew said was exactly 100% spot on. 70%, the number I believe, and I could be wrong, I believe that number was actually 69% of 401ks have exposure to consumer credit. Okay. And you say, okay, it's slightly exposed. Okay. So how do they get that exposure? Because there's mutual funds. And what a mutual fund will do is there'll be a mutual fund that says they're an S&P mutual fund. Okay. And this is a funny thing with mutual funds. They can say they're one thing, but when you start digging into their actual paperwork, all right, you find out they hold a lot of other assets besides what they advertised as being. Okay. And in there, a lot of them take consumer debt exposure. The reason why, the yield on it is very high. So they do a small portion of it to expose themselves and get a kicker on their yield. And what happens is you don't know that. You don't know that. What you see is you see okay, let's see, I have an S&P high yield fund. I have a NASDAQ fund. I've got an energy fund. I've got this, but you don't know that there's exposure in each one of those. Common portfolio exposures to consumer debt are between 10 and 20% of the average portfolio. That's risk. Now, it's not just that loss. Can you grab the next slide for me, Drew? It's not just that loss, right? There's that linear loss. Okay, well, I can deal with a 5% drop in my portfolio. You have to understand it's not just the 5% loss. It's all of the indirect, what they call the nonlinear repercussions that actually cause the damage. So yes, you lose that portion that's in the fund, right? But there's also correlative drops. For example, BlackRock's stock went down, their share value went down. Okay? Understand their share value went down when they lost the one fund. So it didn't just hit the one fund, it was also the company's share value. This is happening to a lot of the major banks, and it actually got a little scary. Okay? When that happens, what do people do? They want to sell. They want to get out. I want to get my money back. I want to go liquid, right? Well, so what happens? There's a capital call. Everybody goes, I want my money out. You can't do your money out right away. They put you into, the term is liquidity freeze. Okay. Now a liquidity freeze is you can't pull all your money out. You can have 5% of your money right now. Okay. This is much worse with private equity. Private equity, they can tell you that you're on hold for 6 months. They can tell you it's written into their paperwork. Some of them, when you initially invest in some private equity funds, it's a 1-year hold before you can touch your money. It goes into a black box. It gets traded and put into investments and this and that, and you can't pull it out for a year. Well, there's a lot of other language in there that says at times they can lock it. Blackstone's BCRED investors, they tried to pull out $3.8 billion in 48 hours. That's one fund inside of one private equity fund. They tried to pull out 7.9% of the assets in 48 hours. And you know what they said? Hold on a second there, buddy. Hold on a second. And just so we're clear, I'm not going to sit here and crap on Blackstone. Okay. This happened to Morgan Stanley. They have their what they call their North Haven Private Income Fund happen to them. They got repurchase requests of 11% in 48 hours. 11%, guys. Okay. What happens when you can't get your money out? Okay. What happens when you can't get your money out? You get frozen. You can't rebalance. Your portfolio is stuck. You're stuck in what you're in. Okay. When you're stuck in what you're in, now the share prices start to go down, don't they? So now you have what they call contagion. The contagion spreads from one asset to another because you can't get out of it. Okay. Now you have other issues, right? If you're invested somewhere and you need to pull money out, you can have margin calls. I don't know how many of you guys are traders. This is a major issue though. Okay. And one of the biggest ones is what they call a leverage unwinding. All right. A lot of these assets are held in multi-tiered, cross-collateralized pools. And what a leverage unwind is, if there's an issue and it drops below a certain point, the entire pool gets called. What's the problem with that? If you were earning, say, 7% a year out of there, that 7% a year just stopped. All stopped. Brakes went. When you find out that there's a leverage unwind going inside of one of these funds, what do you think happens to the share price? You think it goes up? So
I think these people don't.
Portion.
Just real quick, and to make a really simple analogy. So the problem with running on a bank is that banks don't have as much money as they have in your statement, right? Your statement plus my statement plus Michael's statement, they don't have all that money. So that's the problem with running on the bank. The same problem exists with brokerages and funds.
Yes.
They're invested in things they don't have the money for.
Right.
They are leveraged up at a certain point.
That's how they make money.
They start collapsing the value and people start wanting to grab money and also the value doesn't perform like it's supposed to. People can say your fund is out of my 401k. I'm not letting you be in my 401k anymore. That is the same thing as running on a bank that doesn't have the money.
Give me one more slide, Drew. So to sum up what I was saying, the problem with traditional diversification, which is what we're all told, there's not a person on this call who hasn't heard diversify, 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 you'll be safe, is that when the system gets stressed, and let me tell you something, it's been stressed for about 1.5 years, 2 years now. All we needed was that extra little piece to push it past the point of stress. When the system gets stressed, everything becomes correlated. Banking stability drops, credit markets drop, market liquidity drops, corporate earnings drop. Everything becomes correlated. All the things that were diversified, where you were supposed to go to protect yourself, they all fall together. Okay, so what do? Drew?
Well, this is where you follow the big money. What's the big money doing, right? Well, the big money is already shifting into oil and gold and real estate. It's getting so bad that Congress wants to pass a law that doesn't allow funds like BlackRock, right, like Vanguard, to buy residential real estate. They're buying so much residential real estate that they want to pass a law that limits their ability to do so. Everyone's getting into gold, real estate, and other commodities like oil, okay? Why? Because this massive shift, this massive unwinding is happening as we speak. And there's no bigger money than central banks. Central banks of the world control all the money for every part of the world, right? We've got the American central banks. We've got the European central banks, right? South America central banks. We've got the Asian central banks. They control the world's money. And they just bought more gold last year than they bought in 55 years. And they increased their purchases by 38% going into this year.
As the market was going up. Bear in mind, gold was at all-time highs when they were doing this. It wasn't like it hit a low level and they bought in. They were driving the price of gold up, which doesn't make sense as an investor unless there's another reason for it.
And physical gold is not tied to these market conditions. It's got its own sovereign value that is globally recognized. It's not tied to the markets. It's not tied to government debt, right? So these banks can collapse. Guess what? It doesn't affect your real physical gold. And that is the biggest difference when people say, well, what about paper gold, right? What about GLD? What about SLV? No, physical precious metals will let you get out of the matrix and actually be in a sovereign asset that is not only globally recognized and not tied to these debts, right, and these issues. It's also 100% insured with all risk coverage. Now, a lot of people don't realize this. You can go to the bottom of your statement page, all your brokerage statements, and read these words. These investments have no insurance, can lose 100% of their value. Wonder why that is. Why do you think you can't have insurance on your investments inside of your retirement account, inside of your brokerage account? Because you don't own the asset. You have beneficial interest. See, about 25, 30 years ago, if you bought a stock, you actually got the stock in the mail. Well, those days went away when we started fractionalizing brokerages, just like we fractionalized banks. You no longer own the asset. You have beneficial interest, and they cannot let you insure something you don't own. Now, the brokerages have something called SIPC. Okay, SIPC insurance is great, but it only covers you up to $500,000, and it only covers you if the brokerage goes insolvent. It doesn't cover you for anything that happens internally to those investments, again, because you don't own it. Any cybersecurity threats? Not covered. Any kind of technical difficulties? Not covered. Any kind of scams going on within that account, like a money manager, right, investing in something that he wasn't supposed to? Not covered. Unless, of course, the brokerage goes insolvent, right? Physical precious metals, 100% insured with all risk coverage and not taxed the same. Here, I'm actually going to go off slide. I'll come back to this slide here. See, this is the coolest thing in my opinion about gold. And by the way, great price. It's hovering around this 5,000 range. It's called consolidation. You want consolidation. It's been at this $5,000, $5,200 range for a few weeks now. That is amazing because that's good sign for next level up. And some analysts, I think Bank of America is calling for 6,000 an ounce gold by summertime. So your timing couldn't be better. Now, if you go online and you type in to any major financial news website, right? CNBC, Bloomberg, Yahoo Finance. You're going to see this. Gold COMEX, April 2026. That is spot price. See, what people don't realize is spot price is not the price of actual gold in your hands. And this is amazing. This is the benchmark price for the market. This is the raw ore out of the ground that has not been taken delivery of, has not been melted down, and not stamped into a coin or bar. But this is what the government will use to track the value of gold inside your retirement account. So everyone, remember this number, 5,770. Now, it's popping up and down, 5,007, 5,008. Okay, remember that number. Now, if you go... None of you need me to buy gold. Everyone here can go to the U.S. Mint's website, usmint.gov, and buy yourself a brand new American Gold Eagle. I know this says 2025. The 2026 will be out next week, okay, from the Mint. Now, that being said, I want everyone to know the American Gold Eagle is the number one bought and sold coin in the world. No other coin is bought or sold more often for more money than the American Gold Eagle. Don't let anyone tell you any different. And if you go to the U.S. Mint right now, you can buy one for $5,970. Now, I think that price is a little high, but they do give you a nice velvet box. Now, if you go to the U.S. Mint direct, you're probably not going to get any customer care. You're not even going to talk to a live person. Number two, they don't do IRAs. If you want gold in your IRA, silver in your IRA, they can't help you out. And they do not buy back their metals. Okay, if you want to cash out, let's say gold. I have clients that have more than quadrupled their value in gold just in the last 10 years. Okay, and if you want to cash out with the U.S. Mint, they can't help you out. Right? Now, why would you buy from me? Well, number one, I have great customer care. I always answer the phone live. I never leave the day without answering all my phone calls and emails. We do IRAs, actually. That's what we specialize in. About 80% of our clients are IRA clients. We also buy back our metals. We have probably the best buyback policy in the marketplace. Same day, we give you a quote, fair market value, no discounts, no penalties, no fees. And last but not least, we are buying millions and millions and millions of dollars of gold on a regular basis. So we're able to get a deep, deep discount and pass along some really good savings. We're usually about 20 to 30% less than anybody else out there. Now, I know this price is high. The U.S. Mint, don't know why they charge this much. But you can see these coins selling for $5,500 all day long online. $5,500. Well, wait a minute. You remember that the government looks at spot price when evaluating your gold in your IRA for tax purposes. Will you tell me, would you rather be taxed at $5,000 a coin or $5,500 a coin, which is, again, average value of a coin in the open market right now? You tell me, would you rather be taxed at $5,500 or $5,000? And that might not seem like a lot, but that's 10% difference. And in retirement, you know and I know, either A, you're not working, or B, you're working but not making as much money as you used to, so every penny counts. And you can also own physical precious metals that are deemed non-reportable by the IRS, which means while you own them, you don't have to tell anybody that you have them. The only privacy and anonymity that I know of in an investment that exists, and me as a U.S. dealer, I don't even have to tell anybody that you bought it from me. Now, this is probably what you should be asking yourself, right? How much of my portfolio depends on this very fragile financial system that's being manipulated and, in my opinion, in a very precarious position going into the rest of 2026, especially with private credit and the demise that's looking like it's unfolding. Are you exposed to credit risk? 70% of people, if you have a 401k, an IRA with any kind of mutual fund, or a pension, especially a pension, you have a 70% chance that you are in private credit investments. Again, I think Michael said, right, they do some fancy labeling of their funds and don't tell you they're in private credit. But if you open up the doors, you'll see that they're invested in private credit, and in some cases up to 25% of the fund's assets are in private credit. Oh, and the default rate, by the way, 15% on these investments. And again, the lockdown is causing such chaos. And again, if we have to bail this out, right now today, it's a $2 trillion buyout. That's the speculation. So 2008 was an $800 billion initial bailout. Today, this private credit fiasco, $2 trillion. And remember what Michael said? That was guaranteed by real estate. This is guaranteed by nothing. Okay, so how do you own assets outside the system? Get out of the matrix. Get into gold. Get into silver. These are physical assets that, again, are globally recognized. They have their own sovereign value. They're not tied to our debt as a country. They're not tied to this financial system that is, again, heavily manipulated. And, again, you can own physical precious metals that are deemed non-reportable. I personally believe you should do what the big money's doing. Move into physical assets, real estate, gold. Obviously, next steps are have a conversation with me. There's no obligation whatsoever. We'll put my calendar in the chat right now. Go ahead and click a time. My calendar is up to date. If you see a time open, click it. I'm available to talk to you. But make sure at least you find out before it's too late. I never push anyone into anything. I educate first. I support you in your decision. I make myself available. That's my motto, right? Again, look me up online. I only have 5-star reviews. And then last but not least, and I'll let Michael finish up with this one, we have our biggest live event happening. If you're anywhere near it, you got to join us.
One thing I do want to talk about real quick, Drew, if you can go back one slide,
Yep.
if you don't mind. I don't know, the last one, the one that you were talking about. Nope, next one. Go to your one.
Oh, gotcha.
Guys, I said this in the beginning. I hope you understood when you sat and listened. You know, we've been on this call for about 45 minutes. We've been talking. I do my best to continue to try to learn. And one of the things I said in the beginning was I said that I kind of joked. I'm not only a client, president. I'm also a client. You have the opportunity with Drew to speak to a true guru in this field. Okay. There's no obligation to doing the personalized strategy plan with him. I can tell you right now, he's not going to put pressure on you. And I'm amazed at how he does it, because the plan itself makes so much sense when he sits and talks you through it that you don't need pressure. What ends up happening is people do it, and then I'll say this has happened a couple times. They may go shop, and they go shop him somewhere else, and they go, oh wow, he wasn't joking. He really is 20-30% cheaper than everybody else. Okay. What Drew does for his customers is so different than I've seen anywhere else in the industry. And that's why I do so much with him. Okay. I want you guys to understand that. You have an opportunity in having this conversation with him. It's a one-on-one conversation. You get to talk about your goals, your timeline, your risk tolerance, your retirement vision, and develop a plan to get there. I don't know anyone else in the industry who's offering anything like that. And you get it with a guy that I hope he just showed you over the last 40 minutes. He really does know what he's talking about. Okay.
And my calendar, it's in the chat. So just click on a time and I'll help you out. I'll go over your personal situation. Again, no obligation whatsoever.
That's it. And then the last thing, if we can just talk about the event real quick. So guys, if you liked what we were talking about today, I'm going to tell you there was an idea we had about 6 months ago, and we said we want to get the best and brightest minds, right? Guys like Drew, we want to get them in a room talking about the things that they know what they're talking about. Okay. There's no products being sold. This is a completely education driven program. We're going to be talking about metals investment, real estate renovation and flipping. Okay. Flipping strategies going into this market, crypto trading, not crypto trading like, hey, go buy this particular coin or go buy this. An understanding of what crypto is and how it works, right? Where are you going to find that anywhere else? A lot of alternative investment strategies that are coming to the forefront, how to take advantage of them. Tax planning strategies for investors. This is something we don't talk about very often. We have scheduled right now, we have 10 different speakers, all gurus in their industry. We have a limited number of seats. We're intentionally capping it. Okay. The 7th through the 9th, the 7th. Okay. Why is the 7th important? It's a meet and greet, guys. You get to walk around and talk to these people in a one-on-one environment, okay? In a group environment, you get to sit, you get to smoke a cigar with them, you get to share appetizers and talk with them on the night of the 7th. The 8th and the 9th are learning, okay? We're in a learning environment. I told you guys this from the beginning. There's nothing being sold there, okay? This is an environment where you are coming to learn, and I'm going to tell you the goal when we put this together. You guys are going to learn things that you can't find online. You're going to hear things that you don't see with just a simple chat GPT or a Google lookup. Okay. This is to help you guys build and protect your wealth in the current marketplace and what's happening right now. If it sounds like I'm proud of this event, I'm super excited about it because we put this together to be something really special. All right. So check it out. I'll put the link for that in the website or in the chat also. Drew, did you have anything else you wanted to go over?
No, I mean, unless you got some quick questions, I can definitely answer those. But I would encourage you, again, to meet with me one on one, no obligation whatsoever. Go over your personal situation. I'll go into detail of what it might look like to move. It doesn't cost you, again, a dime to move your money into gold. It moves tax free, penalty free into gold. I talked to probably 150, maybe more some months, investors all over the country. And I would say almost nobody knows you can take your money in a qualifying 401k or IRA and move it into physical gold without any penalty, without any discounts, without any taxes, without any fees. It just moving from paper to physical assets, and you get all these benefits. Again, 100% insured, not hackable, not tied to our debt, not tied to these, manipulated financial instruments, right? And dangerous financial instruments. So, and if you can join us for our event, please do, because these are the brightest minds in investing, providing you the best training and education to give you options. Because at the end of the day, that's what it's all about, right? Is having options.
Yep. Yep. Well, thank you guys very much. I hope that you take advantage of this. You reach out to Drew. We will be following this up with an email, so you guys will get an email with all this information in it. Also, a link to the recording. I encourage you to share it. If there's somebody that you think that would benefit from listening to this, where you're going to get it in a way that's shareable, please, guys, spread the information, spread the knowledge. We're here to help. One more time, thank you guys so much. Drew, thank you. Always a pleasure talking to you. Guys, have a great night.
Have a great night. Thanks, everybody.